Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel Alconin, along with Dennis Dick, and we have Jonathan Corpina on the line. He's the Senior Managing Partner at Meridian Equity Partners, joining us live from the floor of the New York Stock Exchange. Jonathan, how are you doing on this Friday morning?
Happy Friday, guys. Happy to be here.
Is there any little traditions on the floor today that they do? I know, they have different, like when it's three on March 3rd, they at 3:33, they do a bunch of screaming and yelling. Is there anything going on today?
No particular tradition for today. But usually on Fridays, you definitely see some Friday pizza pies on the floor for breakfast. So that's always nice to see.
Okay.
Nice.
There's a lot of hot topics out there, and probably nothing's hotter than Greece. And we had Reverend Emmanuel Lemeson on last week. He was talking about it. He thinks they should totally drop out of the European Union, and doesn't really think it's going to have a big effect on your markets. What's your take, and what are your customers saying?
Talking to clients and customers, clearly Greece has been the hot topic, and whether if there were other hot topics going on, I think Greece would probably rank 4 or 5. But since there's really not much more going on and not much more to really focus on, I think investors and clients have really just have turned their attention to this. I kind of think this is going to play out in a way where, at the end of the day, all the dust is going to settle, and everything is going to kind of come back to the norm, and whatever that norm is, that's what it'll be. I don't think we're going to see Greece out of the EU. I think Germany clearly has shown and flexed their muscles, and they have the ability to really calm the waters that are there. It's just the longer this thing plays out, I think it's going to give investors more of an excuse to stay on the sidelines, more of an excuse to use it as a way to focus on something, as opposed to focusing really what we should be focusing on back here in the U.S. as far as our economic data and corporate headlines. I don't think the Greece move either way is really going to affect our markets overall. Yes, it might have some short-term volatility to it, but I don't think it's going to be a major headline when we look back on 2015 and say, wow, what really moved our markets? I don't think it's going to be Greece. I just think it's kind of the hot topic of the day.
It's just been there for so long. I mean, I feel like we've been talking about Greece for almost years here now, and they keep kicking the can down the road. I don't even know if the market cares as much as it used to. I can remember getting some wild, violent swings here, on potential, there's rumors in Greece or something happening. And now it seems like the market almost shrugs some of it off here now. Are you noticing the same thing, Jonathan, that the U.S. markets maybe just don't care as much anymore about this?
Dennis, I agree. I don't think they care, and I think the only reason why they care is that there's nothing else to care about at this time. We find ourselves talking about current topics, whether they're domestic or international, geopolitical, and it kind of all comes back to Greece. And there's no other real major U.S. headline of an ongoing matter besides interest rates that we've really been focusing on at this point. And this kind of just seems like this is the hot topic and something that's got some momentum to it. But overall, like I said, if you step back and we look back in a couple of months from now or 6 months from now, say what kind of effect did Greece have on our markets? I don't think we're really going to point to a date on a chart on a yearly chart and say that's when Greece came out and made the move.
Let's talk about something that everybody definitely cares about, at least today, and that is Twitter. Dick Costolo is stepping down as CEO here of Twitter, and we're seeing some major crazy pricing action on Twitter. After the hours there, the stock got all the way up to $40.45 here on this initial news. That was the initial spike. It has pulled back significantly from those highs. Pre-market action, still some crazy volume, 2.2 million. Still trading up $1 here, but what are your thoughts on the trading action here? Because I'm somewhat concerned because they had the huge spike. Everybody wanted this guy out. Now it pulls all the way back. It's not even trading up that much on this news. What are your thoughts on Twitter?
So, two things are going to happen with Twitter. One is the headline that we saw, and Dick was going to resign, and there was going to be some fashion to it. Or two is that they were going to sell themselves. So I think everyone on a consensus knew that one of these two things was going to happen. Obviously, don't know when. This move is very interesting because by bringing Jack back and bringing Jack Dorsey back into the mix here a little bit, he's somewhat of a renegade, and he's going to come back in and he's going to do two things. He's either going to say, okay, let me come in and right the ship a little bit here and try to get investor confidence back, and let me try to get a little bit more involved. Clearly he's been splitting his time or spending more time at Square than at Twitter and back and forth. Literally, both companies are on the same street, so he walks down the street and goes back and forth as an acting CEO in one and a chairman on the other. And the other side to it is, he's going to come in and he's really going to start to ruffle feathers, and he's going to say, okay, I'm not stepping on anybody's toes. I'm the guy here now to make these decisions, and these are my ideas, and this is what I originally planned it to be, and this is where we morphed into, and this is where I want to bring it back to. Whether Jack stays on as CEO or not, time will tell. Clearly he's not going to be involved in the process of finding a new CEO, which leads me to believe that his name is still in the hat as being the next long-term CEO and not on an interim basis. But clearly Twitter's been under a lot of pressure. You look at the chart on that, the coming down from the highs and traded up as we're close to 55, 56, and has had some pressure on it. It seems like the pressure always comes around during right after their earnings reports. But the news that we saw last night, I think, is something that's going to help this stock for a very short term. This can't be the major headline out of Twitter. It's the major headline today, but in the next 3 weeks to a month, I think we're going to have some other headline that comes out, and whether that's going to be if they're going to acquire anybody, if they're going to be acquired, or if Jack's going to say, listen, we're going to stay who we are, and this is our new identity. And I think that's something that we haven't heard from Twitter in a long time.
Yeah, just let our listeners know, and Jonathan, if you have a chance, at 9:45 today, we are going to have the tech stock strategist, Sean Udall, who really closely follows this stock and is going to make several comments relevant to some of the things you just said. So listeners, stick around a little bit longer today. 9:45 special Twitter segment. Moving on here, the action in the last week has just been kind of topsy-turvy. You had the rollover in the S&P futures market that popped the news on Wednesday about the European Union. Just a yo-yo market. We just still in a trading range here, or are we setting up for some kind of a significant correction?
I'm going to make the same comments that I made, when I was on last time. It was probably a little bit more than a month ago. The market is stuck in this range, this 2100, 2150, and we kind of bounce around a little bit inside that range. And when we got to the top of the range, we broke out very lightly and then came straight back in. And then once again, when we broke down below 2100 earlier this week, we needed a real significant move to get back above 2100 in the S&P, and we did see that. And now it's kind of pulling back a little bit here. I think we're kind of stuck in this range. We're coming towards the end of the month, coming towards the end of the quarter. Investors are still rather confused as to how this market is going to really, which way the momentum is really going to turn. We continue to talk about interest rates. We're getting clearly into the summer and summer months, and things definitely slow down, and trading activity slows down, and participation slows down. So I think investors have had a lot of excuses to not do anything and kind of stay on the sidelines. Now, when I say stay on the sidelines, that doesn't mean that they're liquidating their portfolios and shutting it down till September. It's just more of there's no real conviction as to, do I buy this market here or do I sell this market here? And when that happens, the market kind of floats. So I think we're going to continue to see this floating thing, especially as we get through, once we get past the end of this month, which will be the end of the quarter. Once we get into July, the market is definitely going to float around. And the closer we get to September and this whole mentality that the Fed is going to do something with interest rates in September, I think we'll start to see a little bit of a anticipation from that. But next week we're going to get some comments out of the FOMC, and I don't think they're really going to tip their hand that much more.
Jonathan, speaking about the end of the month, we do have the Russell rebalance coming up here in just a couple of weeks here, the fourth Friday in June. What are your thoughts here, like Russell rebalance? Do you position yourself in some different small caps ahead of this? Do you guys trade these on the floor, or are you kind of hands off? How do you approach the Russell rebalance?
We're very involved in the Russell rebalance. It's clearly one of the biggest trading days of the year. This would compare towards the end of December, where there's that end of the year type of trade and rebalance that occurs there. Our clients are very involved in this. There's a ton of information that's out there about what companies need to be how much of their weighing has to be reduced or added, and in what fashion it occurs. Now, what we used to see in the past is that this is something that would happen right as we got closer to that Russell date. But now we're starting to see, and we haven't started to see it yet, we'll probably start to see it at the end of next week, little by little positioning getting into those stocks, right? So if there's a large imbalance of a stock that has to be bought, we've seen that the funds aren't waiting to the last minute to do it. They kind of start bleeding themselves into it, little by little. And then you'll start to see some momentum that's in the stock there. And then clearly, on the last day, which would be the 26th, that's when you see a real bulk of the activity. I wouldn't recommend that if investors see a stock that's being added to the Russell and they know that it's net to buy, that they would wait to the last minute to buy it because they think a big thing is going to happen. I think it's something that you kind of have to watch as we get closer and closer to that day. But clearly, this is the next big headline that we're going to get as we get towards the end of this month and the end of the quarter, because whether you're playing the Russell rebalance or not, it gives portfolio managers an opportunity to buy and sell pretty decent-sized blocks of stock, and that's what they want. Investors, my clients, which are buy-side hedge funds, mutual funds, pension funds, they want liquidity, they want blocks. That's what they've been looking for, and that's what they've been yearning for. So when you have these individual times throughout the year where this happens, they can come in and buy and sell 1 million, 2 million shares with having little or no effect on the stock.
Jonathan, I just want to talk about the sector rotation. It just seems like if they're selling something, they're buying something else here. And what about this move in financials? Do you think it's just getting going here, or boy, oh boy, we got a little bit of a turn?
Yeah, financials have been this kind of stepchild in the corner of the room where once we got out of the economic crisis, investors wanted to get back into that sector, but really haven't felt the conviction to really get back into that sector. The short-term move here that we've seen in the last week, financials, overall have been up about slightly more than 1% over the last week. I think this might be just a little short-termed. I think whenever we see some sort of momentum in the financials, they do take 2 or 3 steps forward, but then they wind up taking 4 steps back. So I wouldn't get too caught up in the financial move unless we see a real continual pattern there. Clearly in the healthcare sector, there's been a lot of M&A activity. That's been happening over the last 9 months that we've seen this type of M&A activity. I think we're going to continue to see it. That sector has been hot. And then as oil kind of bounces around here, the basic material sector kind of tries to find its way. As we get, oil to 62, 63, it starts to sell back off again. We get back down to 58, and then it bounces there. So we're stuck in that range there in oil. And basic material sector, obviously, trades along with that.
We've been on the line with Jonathan Corpina, Senior Managing Partner at Meridian Equity Partners. He is also an Executive Floor Governor at the New York Stock Exchange. Jonathan, thanks for joining us. We hope to speak to you again soon.
Gentlemen, have a great weekend.
Great stuff. Thanks, Jonathan.